Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about one thing, whether or not the Fed is done raising interest rates. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The Federal Reserve raised rates 25 basis points yesterday. What does this mean for the markets, and are they done raising rates?
Well, good morning, everyone, and good morning, Allison. And you're right. That is the big debate of the day is, how is the market going to react based off of the Fed raise yesterday? So you can see this morning we're in the green. That is, I kind of expected that because yesterday, right after the announcement, the expectations were that they were going to either raise 25 basis points or not raise at all. The thing they were weighing there is, do we further challenge the banks or do we continue to fight inflation? I personally thought that they would respect the banks a little more than they have and not raise a quarter point, but they decided to raise a quarter point. And so since they did do that, then it all became as to, the market sold off for the rest of the day yesterday because it was kind of like, well, even though that was the expectation, they either wanted them not to raise, or if they did raise like they did, to come out and say some verbology during the post raise press conference for them to say something about, we're not going to raise anymore, or we're going to pause, or we're projecting that this is all we need, that sort of thing. And that is absolutely not what they said. So, so we sold off yesterday. I think last night everybody's processing when you think of 25 basis points, it's more symbolic, right? It's not really important to the overall situation versus we raised a huge amount last year. We had the 475 basis point raises in a row, and that's what shocked the system. Now we're just feeling the after effects of that. The quarter point, whether we stay at 4.5 or 4.75 overall for our short-term interest rate, is kind of irrelevant, right? It's just not that big of a needle mover, other than just the symbolic of everybody kind of hoped that they would stop, and they did not. So let's look at some of the specifics from this article. Where answer the question, are they done raising or not? So here's what was said in the okay, this is the important paragraph right here that I wanted to show you. It's kind of highlighted there. Excuse me. We wanted some assurance that the inflation fighting tightening campaign, that's hard to say, could be nearing the end, which is then underlined. They did remove the phrase ongoing increases. So that's good. So now it's more data dependent versus their forecast, which really they've stuck pretty good to their forecast. And their forecast is this would be the last one, then we would pause after that. And then also Powell said that rate cuts are not in our base case for 2023, but that's certainly being priced in at the market. So the Fed is saying, okay, we may be near the end. We don't know. We can't guarantee that, but that's what they forecasted all along. There would be two rate raises in 2023. We've had two. The next one is in May, the next meeting, and potential raises in May. So if they do pause there, which I think the market's going to start to price in, the market's going to get its legs back, and we start going higher from here. As far as rate cuts, we've talked about the long-term Treasury curve is certainly pricing in that rates aren't going to stay here. They may stay here for 2023, but in 2024, you would expect that once inflation is under control, that we would start lowering the interest rates. I don't know. That's kind of too hard to tell. It tends to be kind of like the market. You take you take the stairs up and the elevator down. So what I mean by that is we've gone through, stair steps for the interest rates to go higher, and then probably just stay there until we have something that goes on in the economy that's going to drive interest rates to go lower. And whenever that is, it's usually a significant enough event for rates to drop significantly. So rate cuts tend to be more aggressive than the rate hikes, even though these rate hikes have obviously been very aggressive. So what overall does that mean for the markets? I think when you look at certainly something like the NASDAQ and you go out over a year, is that, well, there's the year, is I do think we're going to get our feet back underneath the market. The market's been kind of pricing in the fact that here's the beginning of the year, pricing in the fact that if we're not at the end, we're near the end of the rate hike cycle, right? And traditionally you can go back, look at all the charts, and that's when the money starts flowing back into the market, because it's not really a crystal clear, all clear moment like we had in COVID, but certainly with the NASDAQ up, we'll see what the exact number is here. Year to date up 15%, still down in a 1 year, meaning the whole chart, but year to date up 15% already. So really, when you look at 2023, markets are up 10 to 15% this year. It seems like the end of the world, because that's all you hear every day on the news. But the markets have been up nicely, and I do expect that that's going to continue. So I do think it's fine if you put money to the sideline. It's getting to be that time to put it back to work, because the big move up is going to be when they officially don't raise rates, but that's 6 weeks from now. So you kind of want to get in front of that, because the markets will creep higher in anticipation of that, and then we'll get the nice move up there. So you're still okay putting money in CDs for safety or to reduce risk, but if you want to get back into equity exposure, I'm perfectly happy to have folks do that right now.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Alice Ankerstar. We'll see you back here tomorrow.